In a stunning New Year's move that flew under most headlines, China has effectively taken control of the global silver supply chain. Starting January 1, 2026, Beijing now requires export licenses for all silver shipments. This is not a minor policy tweak. It represents a fundamental shift in how silver moves across borders. Only a small number of state-approved producers are allowed to apply. These firms must demonstrate years of export history, strict compliance records, and massive production capacity, at least 80 tons of output in 2024 or 40 tons in designated Western regions. In practice, this shuts out private traders and independent exporters entirely. China has centralized silver exports under government oversight, giving it direct leverage over global silver flows. This is not market-driven, it is state-engineered supply control. In late 2025, China's Ministry of Commerce released Announcement 2025 No. 68, formally replacing previous quota systems with a strict export permit regime for silver. The policy places silver alongside other strategically managed metals, signaling that Beijing now views silver as a resource of national importance. Exporters must be registered legal entities, maintain flawless regulatory records, hold ISO certifications, and prove consistent export activity from 2022 through 2024. Most critically, only state-owned trading enterprises are eligible. This effectively turns China into a gatekeeper. By narrowing exports to a handful of vetted firms, Beijing can decide how much silver leaves the country, when it leaves, and at what pace. The implications for global pricing and availability are enormous. The immediate market response has been severe. China plays a central role in global silver refining and distribution, so even modest export constraints ripple quickly across international markets. Shanghai silver inventories have fallen to multi-year lows, while local buyers are paying sharply higher prices to secure immediate delivery. By late December, spot silver in Shanghai traded around $78 per ounce, roughly $6.8 above COMEX futures. This pricing anomaly is rare and alarming. It signals that physical silver inside China is becoming scarce relative to paper contracts elsewhere. Even more concerning, China's silver market has slipped into backwardation, a condition where near-term prices exceed longer-dated futures. Backwardation is a classic sign of stress. It means buyers are willing to pay a premium for immediate physical delivery, reflecting tight supply and rising urgency. In silver markets, this condition historically appears only during periods of acute shortage or extreme demand pressure. Premiums at these levels have not been seen in decades, underscoring the seriousness of the situation. This is not speculative enthusiasm, it is a physical market imbalance. Price behavior across global markets confirms the structural shock. By late December 2025, silver was trading in the $75-78 range worldwide, marking gains of roughly 150 to 160% year-to-date. Silver has decisively broken out of its long-term historical range. Analysts now openly discuss scenarios that would have seemed implausible just a year ago. Several major desks see $80-90 per ounce as achievable in 2026, with some warning that prices could overshoot if supply constraints persist. This rally is no longer just about investor sentiment, it is increasingly driven by physical availability. Western markets are reacting in real time. COMEX futures have surged, lease rates are climbing, and bullion banks are becoming increasingly cautious about lending metal. Reports indicate thinning inventories in both London and New York vaults. As price differentials widen between Asia and the West, arbitrage opportunities emerge, potentially pulling physical silver out of Western systems and into Eastern markets. This dynamic places added strain on already tight supplies and increases volatility across futures markets. In short, the global silver market is being pulled out of balance. This scenario has uncomfortable historical echoes. In 2010, China dramatically reduced rare earth exports, triggering price explosions and supply crises across global industries. Governments and corporations were forced to react after the fact. Silver today shows similar warning signs, a dominant player tightening export controls on a metal already in structural deficit. Unlike past silver spikes driven by speculation alone, this episode is rooted in policy and physical flow control. Market strategists are increasingly vocal. Some view the current move as a generational breakout, with $90 silver achievable if supply restrictions remain in place. More aggressive forecasts openly discuss triple-digit silver during this cycle if export controls tighten further or inventories continue to drain. However, caution remains widespread. Veteran analysts stress that silver is historically volatile and prone to sharp corrections, even during powerful bull markets. Fundamentals may favor higher prices, but momentum-driven surges can reverse suddenly. This market is not without danger. Silver routinely moves 2 to 3 times as violently as gold in both directions. If prices spike further, profit-taking, scrap flows, or policy adjustments could cool the rally. Additionally, any Any surprise shift in U.S. monetary policy, a stronger dollar, or easing export rules from China could trigger sharp pullbacks. This is a market where discipline matters as much as conviction. For U.S. investors, silver remains accessible through COMEX futures, ETFs, and physical bullion. Many holders have already captured extraordinary gains in 2025. Going forward, the key variable to watch is China's policy stance, not just U.S. data. Silver's growing strategic importance suggests volatility will remain elevated. Investors should consider balanced positioning, risk controls, and awareness of how physical markets increasingly diverge from paper pricing. China's January 1st export rules mark a turning point for silver. What was once a freely flowing commodity is now subject to strategic oversight by the world's most influential metals player. With inventories tightening and physical premiums rising, the silver market is entering uncharted territory. Prices may continue higher, but the road ahead will be volatile, political, and unforgiving. Subscribe for more updates.